Before we go for recollection, that is Ind AS 103, we'll focus on your ICMA study material questions. Before that, let us recollect. What is the first step in business combination? Identify what? The purchasing company. Who's a purchaser? Acquirer. The person who acquires what? Control. Clear. Sometimes it can be a reverse acquisition that we had seen, where acquirer will take over what? Control. That will be called as what? Reverse acquisition. Second, identify the acquisition date, simple date on which the effective control is what? Attained. More than 50% control is attained, that is called as what? Acquisition date. Identify the fair value of net assets of selling company on the acquisition date. Take the assets at fair value, liabilities at fair value, that is called as which one? Fair value of net assets. See the consideration paid. Whatever is paid by the purchasing company to the owners of the selling company. Owners of the selling company, that should be included in what? Consideration. We had seen shares allotted, debentures allotted, assets are cash given, present value of deferred consideration. If we pay 4 or 5 payments, take the present value. Fair value of contingent consideration, if any, all the thing will be taken. Find out non-controlling interest if there is any. Minority shareholders in which company? Selling company. We had seen there are 2 methods. Based on fair value. What do you mean by fair value? Based on the consideration paid. If consideration, for example, 80% colonna, 20% how much, like that we work out. It can be a partial goodwill method we can work out. We work out goodwill or gain on bargain purchase based on consideration and NCA minus the fair value of assets of selling company. It will give us goodwill or gain on which one? Bargain purchase. In the books of the purchasing company, what is the entry we pass? Sundry assets accounted are which value? Fair value. All non-current and current liabilities at what value? Fair value. Consideration is paid. NCA is taken. The difference will be goodwill or which one? Gain on bargain purchase. Settle the consideration. Settle the consideration. Consideration to whatever is given. That's what we do. That's what we record. In the books of selling company, we prepare standard 4 ledger accounts. What are the 4 ledger accounts we prepare? Realization account, equity shareholders account, and which one? Preference shareholders account, like that we prepare. We transfer assets, we transfer liabilities. Reserves and surpluses transfer to whom? Equity shareholders. We had seen strong limited, weak limited, that question. Discounts and losses are transferred to equity shareholders. Record the consideration due, get the consideration. First settle the preference shareholders, then at the end settle whom? Equity shareholders. That also we had seen. All these questions I've taken from your ICMA material only. All these questions I've taken from my ICMA material only. It is just a revision process to save the time with solution I've given. Okay, first we'll discuss from this material. Then from CA Institute material also I've taken set up about 10 to 12 questions. We'll discuss that. Look at the first one. A Limited took over B Limited for how much? 12,60,000. No need to have any material. If there is a soft copy, you can use it. Hard copy of your ICMA material also, you can use it. Otherwise, just look at the display. That is more than sufficient. A Limited took over B Limited for how much? 12,60,000. Fair value of net assets, 11,80,000. Calculate goodwill. Simple. What is the consideration? What is the net assets? 11,80,000. Goodwill is how much? 80,000. Goodwill is how much? 80,000. Simple. I purchase assets worth 11,80,000 by paying 12,60,000. By paying what? 12,60,000. Difference is called as which one? Goodwill. We can pass a journal entry also. Net assets account data are 11,80,000. Goodwill account data are how much? 80,000. To consideration 12,60,000. Okay. In the books of B, we will be closing through which account? Realization account. Okay. So it is a simple question that can be tested for 2 marks and the question like it. Go to question number 1B, illustration number 1B. A Limited acquires 100% of shares of B Limited for 12,60,000. Fair value is how much? 11,80,000. Calculate goodwill nu sollirka. Journal entries in the books of which company? A Limited and B Limited. The same the. Okay. Let it be Ind AS 110 or Ind AS 103. Same concepts. Fair value of net assets and consideration paid. The difference will give us what? Goodwill. Difference will give us goodwill. Net assets, goodwill to consideration account. Okay. So in the books of the other company, we just make investment. We just make what investment? We don't take, I mean, in case of holding in subsidiary company, are you purchasing the company or purchasing only the investment? We are purchasing only the investment. We are not purchasing the other company. Selling company is not closed. Ind AS 103, Ind AS 110. What is the difference? Ind AS 103, what do? We take over the other company is closed. Ind AS 110, we acquire only the control. Both holding and subsidiary company coexist. Look at this. A Limited acquired 80% of shares in B Limited for how much? 12,80,000. Fair value of the net assets, how much is given? 14,80,000. Non-controlling interest is recognized at fair value. What do you mean by fair value? Remember simple. 12,80,000 80% na. NCA how much? 20% is how much? 12,80,000 if it is 80%. What is 20%? NCA will be 3 lakh. That is what they would have done. Clear. NCA value 12,80,000. If it is for 80, what is for 20? How much? 3,20,000. Simple. What is the consideration paid? 12,80,000 plus what is the value of NCA? 3,20,000 minus NCA will give us what? Goodwill. That is what we had seen. Goodwill or gain on bargain purchase, like a statement format we have learned and we have done in the initial classes, right? Consideration paid plus value of NCA minus fair value of net assets will give us what? Goodwill. That is what we have done also. Consideration 12,80,000, NCA 3,20,000 minus net assets how much? 14,80,000 will give us what? 1,20,000. Journal entry, net assets account data, goodwill account data, okay, to consideration to NCA. And the consideration is nothing but investment in shares of the other company. Look at illustration 2A.
This journal entry, this investment, that 100% now investment.
There is nothing but cost of control. We adjust against what? Fair value of net assets. Ind AS 110, we see the cost of control, amount paid for shares, and we will see which one, net assets. The resultant figure will be goodwill or gain on bargain purchase. Illustration 2A part. Read through fully, then we will see the solution. Look at P Limited acquired Q Limited by issue of 3 lakh shares of 10 each that were trading at 16 rupees. So, what is the consideration paid? 3 lakh shares into 16 rupees. That is what is given. 3 lakhs into 16, how much? 48 lakhs. 48 lakhs. Then, we are given book value for P Limited and Q Limited. Market value for which company is given? Q Limited is given. What is the market value for Q Limited? 45 lakhs. 45 lakhs is the market value. But we are paying a consideration of 48 lakhs. Market value of the assets taken over is nothing but fair value of the asset taken over. But we are paying a consideration of how much? 48 lakhs. Now, there will be a goodwill of how much? 3 lakhs. Let's assume I'm Q Limited, you are P Limited. You are paying me or giving me 3 lakh shares of 16 each. 48 lakhs. 48 lakhs. But what is my fair value of net assets? Book value doesn't matter. Which value matters? Fair value matters. Fair value of net assets how much? 45 lakhs. 45 lakhs. So you are paying me more. That is towards which one? Goodwill. So net assets account data are 45 lakhs. Goodwill account data are balancing figure to consideration how much? 48 lakhs. consideration to equity share capital will be 3 lakh into what? 10 rupees. This will be 3 lakhs into what? 6 rupees. Now, while preparing the balance sheet, which one you have to take? While preparing the balance sheet, how to prepare the balance sheet? For P Limited, which value you have to take? 80 lakhs plus 45 lakhs. 80 lakhs plus what? 45 lakhs. Equity share capital will be this 60 lakhs plus consideration. How much we have given?
30 lakhs.
30 lakhs. Consideration 30 lakhs. Then other equity will be 20 lakhs plus the securities premium. How much? 18 lakhs. With that, we will prepare what? Balance sheet. Net assets you can check. Purchasing company's book value plus selling company taken over value. Goodwill we have done in the journal entry. This is a total of assets. Equity share capital existing 60 lakhs and the purchase consideration given 3 lakhs into 10 how much? 30 lakhs and the madri. Then other equity already given plus in the securities premium and the 3 lakhs into what? 18 lakhs, totally 38 lakhs. 128 lakhs is the total of the balance sheet. 128 lakhs is the total of the balance sheet. Okay, so this is question number 2. Any doubt in it? Any doubt in it? Let us go to the next question. In the books of selling company, as usual, you will prepare which account? You can go through realization account, equity shareholders account, that 48 lakhs is settled in the month. Same question. We acquired how much? 100% of which company? Q Limited. 100% of Q Limited. P Limited issued 3 lakhs equity shares. Summarized balance sheet is given to us. So acquisition journal entry, more or less it will be the same. Clear? Goodwill is 3 lakhs. Net assets consideration is given to us. Similar entries only will come. Similar entries only will come. Okay. Balance sheet they would have given. You can go through at home. I do not know, they repeated. Leave it. Illustration 4 parang. Illustration 4 parang. NCA should be measured at what value? Fair value. Z Limited acquired 60% of interest in P Limited on 1st January. Z Limited paid how much? 960 lakhs in cash for their interest in P Limited. Fair value of the net assets is how much? 2,400 lakhs. Fair value of the liabilities 900 lakhs. Pass acquisition entry using Ind AS, assuming that Z Limited does not want to report NC. Z Limited does not wish to report at which value? Fair value. What is the meaning?
Partial goodwill.
They want to go or they want to value NCA by using which method? Net assets method or partial goodwill method or. So, what is the fair value of net assets? 2,400 minus 900. How much? 1,500 lakhs. We hold 60%. Now, NCA will hold what? 40%. NCA value will be 1,500 into 40%. 1,500 into 40%. How much? 600 lakhs. 600 lakhs. So, any doubt in it? Net assets. Assets minus liability 1,500 lakhs. Okay, into 40%, 600 lakhs. How to find out goodwill or gain on bargain purchase?
Consideration plus
Consideration
plus the NCA value minus
so 60 lakhs. You can pass a journal entry also. Assets account data are 2,400 to consideration 960 to liabilities how much? 900. Direct NCA value we can work out. Yeah. Asset minus liability 2,400 minus 900. This into how much percentage? 40% is 600. 40% is 600. Goodwill can be taken as a balancing figure. And the consideration is paid is in what? Cash. Consideration is paid in the form of cash. Go to illustration 5. Revision on the Mari. When we run through fast, then we get through fast on the Mari. I give problem, you take notes, and it will take a lot of time. Go to question number 5. M Limited acquired 80% of equity interest, issue of paid up value of shares of how much? 100 lakhs. What is the market value of the shares given?
240.
240 lakhs is given for 80%. Assets are measured at 380 lakhs. Liabilities are measured at 60 lakhs. Non-controlling interest is measured at proportionate net asset value. What is the net asset value? 380 minus 60, 320. NCI will be 320 into 20%, how much? 60. So, if you look at what is the consideration paid? What is the consideration paid? 240 plus NCA oda value 64 minus net assets. Net assets பாருங்க 380 minus 60 320, that is what is this 16. Gain on bargain purchase. We can do through a journal entry also. Assets account debtor to consideration to liability, NCA 64. Gain on bargain purchase can be taken as which one? Balancing figure. Gain on bargain purchase can be taken as a balancing figure. Next, question number 6. A Limited absorbed B Limited. A Limited issues how much? 60,000 equity shares which are trading at 25. Repeated illustration kind of a thing only. Book value of net assets are 12 lakhs. Equity share capital, other equity is given. Fair value of net assets are given. Which value is relevant? Yeah, par value is not relevant. Equity share capital rupees 5 lakhs and all not relevant. Fair value of net assets. What is the fair value of net assets? 13 lakhs. So what is the consideration? 60,000 equity shares of 25 each. 60,000 equity shares of 25 each, how much? 15 lakhs. We acquired everything. So what is the fair value of net assets? 30 lakhs. We paid a consideration of 15 lakhs now. What is excess amount paid? 2 lakhs will be taken as goodwill. No NCI. We acquired everything. Net assets account debtor. Goodwill is a balancing figure. Consideration. To equity share capital, equity share capital 6 lakhs. 60,000 shares of 10 each. This is 60,000 shares, premium 15 rupees. 25 rupees allot pandro. 10 rupees face value, 15 rupees what? Premium. Any doubt in it? Okay, this is what we are going to learn extra. This is what we are going to learn extra. I request you to have notes, then let us continue. இன்னும் பெரிய மெத்தட்லாம் கிடையாது, ரொம்ப சிம்பிள் தான். எக்ஸ்ட்ரா நோட்ஸ் யூ டேக் இட், தட்ஸ் ஆல். அது ஹெடிங் pooling of interest method. Actually, traditionally in AS 14 it was called as amalgamation in the nature of merger. Amalgamation in the nature of merger. Wait, paying attention. Let us discuss about AS 14, traditional accounting standard, and then it may to come for Ind AS 100, that is 1 or 3. What is merger? AS 14 what was defined was management should merge. Management should merge, which means shareholders of purchasing company, shareholders of selling company should continue as shareholders. Number 1. Number 2, control should not change. Control should not change. Number 3, all assets and liability will be recorded at book value. All assets and liability will be recorded at, which means selling company's assets, purchasing company's assets don't change the value, recorded at what value? Book value. Okay, which means selling company's resource and surplus also will be recorded by purchasing company. Selling company's resource and surplus also will be recorded by purchasing company. That is AS 14. Now coming to Ind AS 103, when pooling of interest method should be followed? When the sentence is used. Control of businesses lying with same parties as before. Which simple? B Limited shareholders after amalgamation B Limited shareholders will manage. Business will be managed by what? B Limited, and the control of the. Okay. Then here is where what? Here is where you have to apply which method? Pooling of interest method. Start. Pooling of interest method. I request you to have notes, then let us continue. Shall we? This method is applied. This method is applied. This method is applied when the control lies with the same parties. When the control lies with the same parties. When the control lies between the same parties before and after the transaction. Before and after the transaction. Before and after the transaction. Full stop. Next separate line. Point by point, I request you to take it up. First point. It is also called as business combination under common control. It is also called as what? Business combination under common control. Business combination under common control. Next point. See, so far we were recording assets and liabilities at what value? Fair value. But when pooling of interest method is followed, you should record them at what value? Book value only. Start. Next point. Under this method, assets and liabilities are recorded at book value. Recorded at book value hyphen same carrying amount. Whatever was the carrying amount to the old company, that will be continued by this company. Next point. Transferees. What do you mean by transferees? Selling company or purchasing company? Transferees reserves and surplus. Transferees reserves and surplus. Purchasing companies reserves and surplus. Okay. Transferees reserves and surplus is merged with transferors reserves and surplus. Transferors reserves and surplus. Transferees reserves and surplus is merged with which one? Transferors reserves and surplus. Transferors reserves and surplus. Full stop. Next point, most important point. Consideration is measured only at nominal value. Consideration is measured only at nominal value. Nominal value of the shares allotted. Consideration is measured only at the nominal value of shares allotted. Within bracket, no securities premium. When you allot 1 lakh shares of 10 each, it will be 1 lakh into 10, that's all. Don't record which one? Premium. Okay. It will be recorded at what value? Nominal value. And it will be recorded at what value? Nominal value. Next separate line. The separate line. The balance, if any, will be recognized as goodwill or capital reserve. The balance, if any, will be recognized as goodwill or capital reserve. The balance, if any, will be recognized as goodwill or capital reserve. Shall I? What is the first one? It's also known as business combination under which one? Common control. What is the next one? Assets and liabilities are recorded at what value? Well, ignore fair value. What is the next one? Transfer is reserves will be merged with what? Transfer as reserves. Next. Consideration in shares will be measured at what value? Nominal value, face value only. Don't record which one? Premium. Ignore premium. Next. The balance in consideration, if any, will be transferred to which account? Goodwill account or which one? Capital reserve. Goodwill or which one? Capital reserve. Now come to illustration 7. Read this illustration 7. C Limited issued 80,000 equity shares to A Limited and 75,000 equity shares to what? B Limited at a nominal value of 10 rupee per share, which means purchase consideration is 80,000 into 10 for A Limited, 75,000 into 10 for what? B Limited. Book value of assets of A Limited 12 lakhs கொடுத்திருக்காங்க. Equity share capital 5 lakh, other equity 7 lakhs கொடுத்திருக்காங்க. This is for A Limited. What is given to us next? Fair value of net assets of which company is given? A Limited is given to us. Is it relevant? No. Fair value is irrelevant. Fair value is irrelevant. The fair value of assets are not relevant for solving. Fair value of net assets are irrelevant for solving. What is the next one? Book value of B Limited's net asset is 10 lakh. Equity share capital is 4 lakh. Other equity is how much? 6 lakhs கொடுத்திருக்காங்க. What is the next one given? Fair value of net assets are given at what? 15 lakhs. That doesn't matter for us. Okay. This is solution. Whatever I have given in red lines are nothing but to tell that we are going to follow which method? Pooling of interest method. How the method is applied? How the method is applied. Now, since it is a question of the first time we are solving, let us do it in the notebook. Let us do it in the notebook. Start. What are the selling companies? A Limited, B Limited, total. Consideration will be recorded at nominal value only. What is the consideration given? 80,000 shares of 10 each. Take it up along with me, no need to wait. 75,000 shares of 10 each. 7,50,000. Total consideration 8 lakhs plus 7,50,000, 15,50,000. This will be called as share capital of which company? C Limited. Then other equity will be maintained at book value. For both the company, we will take it at what value? Other equity means reserves and surplus. Other equity எவ்வளவு கொடுத்திருக்கோம்? 7 lakhs. Given in the question. B Limited, what is given in the question? Other equity. A Limited 7 lakhs. B Limited or other equity how much? 6 lakhs. That will be maintained at book value. Whatever is given, it will be maintained at what value? Book value. Maintained at book value. Is there any non-current liability given in the question? Not given. There is any current liability given in the question? Not given. No current liability. Then assets will be maintained at what value? Book value. Assets will be automatically maintained at what value? Book value. What is the book value? 12 lakhs. Book value of assets. Book value of assets எவ்வளவு கொடுத்திருக்கோம்? 12 lakhs. 12 lakhs. The other one is 10 lakhs. Ignore fair value. Ignore which one? Fair value. Total 22 lakhs. So we get total of assets. We get the total of liabilities also. The difference will be taken as what? Difference will be taken as goodwill or capital reserve. Of course, you can find liability side. Of course, it is more than the asset side. It is called as which one? Goodwill. What is a goodwill? 3 lakhs balancing figure. You can pass entry also, the same thing will come. Here it is 3,50,000 balancing figure. If you want, you can pass a journal entry. What is the entry you will pass? Net assets account data. What is the net assets account data? 12 lakhs. Goodwill account data, it is a balancing figure. 3 lakhs. To current liability is not there, nil. To non-current liability also, nil. To other equity also will be taken over. Nothing but reserves and surplus. What is the reserves and surplus? It will be maintained at book value. This is the difference. In case of normal business combination, we will not take over. To consideration, it will be recorded at what value? Nominal value. Even if they give you market value and all, please ignore. This is like a balance sheet after business combination. And now the consideration is paid. Consideration account, data to which account? Equity share capital. Pooling of interest method, nothing more. What is the main difference? Record the assets and liability at what value? Old carrying amount. Number 2, reserves of the companies also will be taken over. Reserves of the companies also will be taken over. Consideration will be recorded at what value? Nominal face value, par value, nominal value. The resultant balancing will be taken as what? Goodwill or gain on bargain purchase. Goodwill or capital reserve. Goodwill or capital reserve. That is the difference between others and this one. You can combine and pass the entry also. 12 lakhs plus 10 lakh, 22 lakh. This goodwill will be like 3 lakhs plus 50,000. To other equity will be like the 7 lakhs plus 6 lakhs. Consideration is 8 lakhs plus 7 lakh 50,000. Okay. So Any doubt in it? So in the exam, you can pass a separate entry for A limited, B limited like this, or you can give a combined entry also. For A limited, B limited put together, you can give which one? Combined entry also. We are here to tell that the goodwill in this amalgamation or business combination is how much? 6 lakhs 50,000. Shall we? Can check the workings also. 8 lakh, 7 lakh 50,000 total 15 lakh 50. Other equity, reserves and surplus they added, total net assets they added. The difference is what? Goodwill. They would have passed net assets are A limited, net assets are B limited. To consideration to other equity. Balancing for is which one? Goodwill. Consideration account data to which one? Equity share capital. Look at illustration 8. Don't read the solution, just read the illustration only. No, so on 31st March 2011, okay, A limited is externally reconstructed into what? B limited, which means A limited becomes which one? B limited. B limited is formed to take over the business of what? A limited. Now automatically shareholders of A limited will become what? Shareholders of B limited. So whether the control changes or same control will be there. Same control will be there. So 80,000 equity shares are issued at a nominal value of what? 10. Book value of assets 12 lakhs. What is the fair value is irrelevant. So it's a business combination under common control. So consideration is how much? 8 lakhs. Asset will be recorded at what value? Book value. They would have passed journal entry. Net assets account data are 12 lakhs. Goodwill account data are the balancing for 2 lakhs. To consideration 8 lakhs. Reserves and surplus will be automatically maintained. Consideration to equity share capital how much? 8 lakhs. Done? Any doubt in it? Any doubt in it? When we are giving shares at a premium, premium will be ignored. Pooling of interest method. The question level shares 80,000 shares into 10 ilya. Suppose if it is allotted as 80,000 shares of 10 each, issued at 20 rupees in kurta, ignore the premium. Shares allotted will be recorded only at what value? Nominal value, that is called as pooling of interest. Consideration itself will be recorded at what value? Nominal value. Consideration and nominal value. We are not getting any money. We are not getting any money. We are getting only the what? Business. That will be adjusted in the form of goodwill or which one? Capital reserve. That will be adjusted in the form of goodwill or capital reserve. Other equity type பண்ண மறந்துட்டாங்க வரணும். Other equity they forgot to type வரணும். Questionலயே type பண்ண மறந்துட்டாங்க. Okay. Next. Pay attention. Pay attention. This is called a step acquisition. Do you understand what is pooling of interest method? What is the next one? Step acquisition method. Pay attention. Pay attention. We are holding 40% of shares. It was acquired during 2020 for rupees some 5 lakhs. 40% of shares were acquired during 2020 for 5 lakhs. Today we acquired 30%. That is in 2024. Let us assume we acquired 30% for rupees. Let's assume 4,50,000 for rupees. Okay, 45 lakhs. Now, totally we are holding how much? 70% of control. 70% of control. Of course, we become which one? Acquirer. Acquirer is a person who holds which one? Control. 30% will be called as which one? NCI. Now listen, while calculating the goodwill or gain on bargain purchase, ignore the pooling of interest method. Now come back to the normal one. What is the 40% we acquired for? 5 lakhs. 30% we acquired for? Okay, 50 lakh, 45 lakh, 50 lakh, 45 lakh. So what will be the value of 70% control? What will be the value of 70% control? 50 lakh plus 45 lakh total allowance. Don't take 95 lakhs. The accounting standard says the previous valuations also should be fair value. Previous valuation also should be fair valued. Simple. If a 30% is acquired for in 2024 for 45 lakhs now, in 2020, the same thing, what would have been the value? For 40%, what would have been the value? Simple. In 2024, let us assume this is today. If it rupees 45 lakhs is eval percentage? 30% control. Okay. What is the fair value? What is the fair value of that 40% control acquired earlier? What is the 40% fair value? 45 lakhs if it is for 30. 45 lakhs if it is for 30. What is for 40? 60 lakhs. Simple. 60 lakhs is the fair value of the previous acquisition. Okay, how much? 60 lakhs. What was the cost of previous acquisition? 50 lakhs. Simple. The 10 lakhs will be recognized in other comprehensive income. The 10 lakhs will be recognized in which one? Other comprehensive income. Okay. Now, while working out 70% control, while working out which one? 70% control. Simple. That 40% control will be taken at what? At fair value today. What is the fair value? 60 lakhs. 30% control. 30% control acquired today. What is the value? 45 lakhs. So what is the total 70% control? Fair value of acquisition. And the 70% is how much? 105 lakhs. 105 lakhs. Wait. If NCI is measured at fair value, 70%, 30% will be how much? 30% Number simple, 105 divided by, if this is for 70 now, what is for 30? How much? 45 lakhs. So what is the total? 105 plus 45. 105 plus 45. This will be the total against which we will compare which one? Fair value of net assets. We will compare this. The difference based on this we will decide which one? Goodwill or which one? Gain on bargain purchase. So in case of step acquisitions, simple, to determine fair value. To determine which one? Fair value of NCI, goodwill or gain on bargain purchase. What we need to do? What need to do? Previously held investments should be taken at what? At fair value. Change, if any, in other comprehensive income, it will be reported as other equity. Other equity is nothing but reserves and surplus in the balance sheet. First, I request you to note this. Then I will give it as in the form of organized example. Take up this. During 2020, A Limited acquired 40% control. Please take it up. In B Limited for rupees, and during 2024, another 30% for rupees 45 lakhs. Fair value of net assets of B Limited during 2024 was rupees 1 crore 28 lakhs. That's all. This is a question. Fair value of net assets of 1 crore 28 lakhs. Difference will be taken as what? Goodwill. What is a goodwill? 22 lakhs. Suppose if NCA is measured based on net assets, what you would have done? The 70% of the fair value will be the same. That will be what? Same. NCI will be 1 crore 28 lakhs into eவ்வளவு percentage? 30%. Less fair value of net assets. Please take up this also. This case also request you. If NCA is measured based on net assets, this is the value.
வந்து எப்பவுமே 50% அப்புறம் தானே சாப்பிடுவாங்க. அதுக்கு முன்னாடி வரைக்கும்
It will be
இன்வெஸ்ட்மெண்ட்
recorded as either associate or joint venture. It will be recorded as investment in associate or which one? Joint venture. If control is less than 50%. More than 50% control, it will become either a holding or subsidiary company or business combination. Shall we proceed? So wherever there is an additional acquisition, ensure that the previous valuation is also fair value, and the difference between the amount invested and the fair value is recognized as what? Expense or income in OCI. Then if NCA is measured at fair value, goodwill will be 22 lakhs. If it is based on net assets, it is called as which method? Partial goodwill.
Sir, for OCI, what would be the journal entry?
Investment account data to OCA. Investment account data to OCA. Investment would have been recorded at 50 lakhs. We have to increase it by 10 lakhs. Investment account data to OCA 10 lakhs. We'll see in the next question. Shall we? Look at illustration number 9. Entity A acquired how much? 35% for 35,000. Fair value of the shares 42,000. Thus 7,000 reported under OCI in 1920. Then further acquired 40% by paying a consideration of how much? 60,000 கொடுத்திருக்காங்க. Entity A identifies net assets of B Limited valued at how much? 1,20,000. Okay. At the acquisition date, value of the 35% are how much? 45,000 கொடுத்திருக்கா. NCA is measured based on what? Proportionate net assets. Read the question full, then we'll do. Shall we? Let us solve it in our method so that we'll understand better. Start. This is for which one? Illustration number 9. What was the, okay, what is the value of or consideration paid for the latest acquisition? Consideration paid for the latest acquisition, 40% is how much? 60,000. Therefore, fair value of previously held investment. Today 35% எவ்வளவு proportionate ஆகும்? Simple. 60,000 if it is for 40, what is for 35? 60,000 if it is for 40, what is for 35? How much? How much?
Previously எல்லாம் அங்கேயே கொடுத்திருக்காங்க. இந்த 45,000 கொடுத்திருக்காங்க.
Oh, okay. Fair value கொடுத்துட்டோம். Okay, then you can take it. If that is not given, we'll work out by this method. So if that is given, you can take that. 45,000. Then, what is the total? 1,05,000. It is given in the question. If it is not given in the proportionate or otherwise, it is given in the question. Then add fair value of NCI. Fair value of NCI based on என்ன கொடுத்திருக்கோம்? Net assets. Based on net assets. What is the net assets given? 1,20,000 into எவ்வளோ percentage ஆகும்? Into 25%. How much? 30,000. Total 1,35,000 less fair value of net assets. Acquired how much? 1,20,000. Now goodwill how much? Goodwill how much? 15,000. Okay. Now the 35% investment. What was the cost of that investment earlier? What was the cost of the investment earlier? 35,000 க்கு purchase பண்ணிருக்கோம். In this already what is recognized in OCI? 7,000. In OCI we have added how much? 7,000. So we took it as how much? 42,000. 42,000 was the fair value during which one? 1920. 1920. How much? 42,000 record பண்ணிருக்கோம். Okay. What is the current fair value?
45,000.
That 35% is how much?
45,000.
5,000. Okay. Additional gain. Additional gain எவ்வளவு இருக்குங்க? 3,000 இருக்கு. Additional gain 3,000 இருக்கு. Okay. This previously recognized OCI and this additional gain both will be transferred to P&L account. Both will be transferred to which account? P&L account. OCI account data. Earlier OCI எவ்வளவு போட்டிருக்கோம்? 7,000. Investment account data. Investment account data. இப்போ increase ஆனது எவ்வளவு? 3,000 to which account? P&L account. We can transfer how much? 10,000. This is the treatment for previously measured investment. For this, what is the entry we'll pass? For this, what is the entry we'll pass? What is the entry we'll pass for this? Net assets account data. Net assets account data எவ்வளவு value? 1,20,000. Goodwill account data 15,000 to consideration. Consideration fair value how much? 1,05,000, or you can say investment to NCI based on proportionate net assets how much?
30,000.
The consideration is paid in the form of cash to purchase. Take up this. That's what they would have given. Investment OCI to P&L account transfer பண்றோம். Net assets are 1,20,000, goodwill 15,000, consideration is 60,000, and the investment 45,000 போட்டிருப்போம். Actually, today, how much of consideration is paid? Today, how much of consideration is paid? 60,000 to investment from the previously held 35%. We are closing that now at fair value. What is the fair value?
45,000.
Take it. Today, fair value. Step acquisition method, investment should be what? Fair value. Investment should be fair value. Already 35,000 plus 7,000. This was already recognized in OCI. Appo entry pass பண்ணிருப்பாங்க. For example, while investing the money, investment account data 35,000 to bank pass பண்ணிருப்பாங்க. This is already passed when the investment was made. அப்புறம் அந்த OCI ல recognize பண்ணிருக்கமே change in fair value. Investment account data எவ்வளோ? 7,000 to which one? OCI. Already they would have recorded what? 7,000. That is what is this OCI. Now investment account data to P&L account. What is extra value? Investment account data to P&L account. And the difference between 45,000 and 42,000 we recognize it. How much we recognize it? 3000 we recognize. இது ஆட் பண்ணி பாருங்க, ஆட்டோமேட்டிக் என்ன வந்து இதோட டோட்டல் தான் 45.
3000 OCI.
Because earlier it was investment, now it is what? Consolidated financial statement. The nature of investment itself changed. So investment should be recognized at what value? Compulsorily at what value? Fair value. Da. So automatically that income will be recognized in which account? P&L. That's why earlier recognized on OCI, now change in the value, both are transferred to which account? P&L. OCI represents what? Unrealized gains. Okay. P&L account represents what? Realized gains. Once your normal investment becomes holding in subsidiary company investment, that gain is realized, you transfer to which account? P&L. Your study material at 10 to 15 will be like similar pattern of whatever we have done in the class. So you can go through that. அது பண்ண bore அடிக்கும் again. So I request you to go through 10 to 15 the same model problem we have done in the class. போறீங்களா அது? Is it over? Who is the acquirer as per Ind AS 103? Who gains what? Control. Who gains control post amalgamation, post business combination. Next problem, we'll see from outside when you look at A Limited takes over B Limited. But if you look at the real control point of view, B Limited taking over which company? A Limited, like that it will be there. So without practicing the classroom example, A Limited allotted shares to B Limited, say A Limited purchase consideration or code. But we'll analyze. Which question? Illustration 16. Shall we? We'll go ahead. Go to question number 16. Illustration 16. Not a very good question. This can be tested in exam. H Limited acquired 100% of equity shares in what? H Limited. Who's acquiring? H. Who's selling? Yes, and the okay, look at non-current assets are given, current assets are given, equity shares. H has 100 shares, S has what? 80 shares. Then non-current liability, current liability is given. Look at H Limited and X Limited, shares are quoted at what? 20 and 50 respectively. H Limited issued shares based on what? Quoted price. Holding company will allot the shares based on what? Quoted price கொடுத்திருக்காங்க. 50 rupees அவங்களோட ஷேர், இவங்களோட ஷேர் எவ்வளோ? 20 rupees. If you look at H Limited will allot எவ்வளோ shares? In S Limited, how many shares are there? 80 shares are there into 50 divided by what is our value? 50 divided by 20. 50 divided by 20. Otherwise, 50 divided by 20 போட்டீங்கன்னா it will be like 2.5 shares. Okay. Sellers 50, our value 20 na 2.5 shares இருக்கும். That means 80 shares into 2.5 na எவ்வளோ shares allot பண்ணுவாங்க? 80 shares into 2.5 எவ்வளோ shares? 200 shares will be allotted by which company? H to which company? S Limited. Wait பண்ணுங்க. This is pre-merger. You have to check post-merger also. Post-merger, wait பண்ணுங்க. Post-merger, hold H Limited shareholders will continue to hold எவ்வளோ shares? How many shares are there in H? 100 shares. And S Limited shareholders would have got 200 shares. So out of total how much? 300 shares. Okay. 200 out of what? 300. That is 2/3 control is with which company? S Limited. It is called as what? Reverse acquisition. Okay. Otherwise, here our acquirer is which company? S Limited. S Limited is what? Acquirer. So acquirer S Limited treat பண்ணி entry pass பண்ணும். Okay. If acquirer is S Limited, okay, who's the acquirer? Who is acquiring? H Limited. H Limited has how many shares? 100 shares. அதோட fair value எவ்வளோ? Rupees 20. So 100 into 20, the fair value of the shares held by them, that will be taken as consideration. This will be taken as what? Consideration kept by them. Okay. In the books of which company? S Limited, on the acquirer. Okay. What is the net assets fair value? H out of fair value. Non-current asset, clear? Non-current asset. Non-current asset account data are how much? 2,400. Then current assets account data are how much? How much? This one, 1,000. To which one? Non-current liabilities. Non-current liabilities எவ்வளோ இருக்குங்க? 700. To current liabilities, what is the current liability? 800. To consideration, nothing but the capital. எவ்வளோ இருக்கும்? 2,000. The balancing for can be what? Goodwill or gain on bargain purchase. Balancing for என்ன வருது? Take it. That's what they would have given as an answer also. Goodwill பார்த்தா 100 கொடுத்திருப்பாங்க. They would have passed entry also. Non-current asset, current asset, goodwill balancing figure, non-current liability consideration கொடுத்திருப்பாங்க. Consideration accounted out to equity share capital they would have given. We can prepare consolidated balance sheet. Non-current asset will be 2,400 plus 2,400 plus 3,000. Current assets are 1,000 plus 1,000 plus எவ்வளவு இருக்குங்க? Goodwill value 100 தான். Allowed it. நான் போடுறது correct.
நீங்க போட்டது மைனஸ்.
சரி, ஓகே. இங்க ரிவர்ஸ் அக்விசிஷனால ரிவர்ஸ் அதை ஒர்க் அவுட் பண்ண முடியும். Capital and other equity will become like consideration மாதிரி ஆயிடும்.
அசெட் வச்சுதானே நம்ம வந்து எவ்வளவு பே பண்றானோ
Correct, but control base பண்ணி பார்த்தா அவன் acquire ஆயிடும். So from that point of view only we have to work. Because who's acquirer? Who's acquirer? S is acquiring. That is H limited fair value. In the problem reverse acquisition is it? Of course, reverse acquisition of the opposite party becomes which one? Acquired. Goodwill. And liability account. Non-current liability எவ்வளவு இருக்கு? What is a non-current liability? What is a mistake? 2,000 internet okay, 2,006. Current liability is 1,000. Have we taken up this? Or next part? Next, again, a very good question, a tricky question also. Go through this. DA Limited and TA Limited was amalgamated in the form of what? Data Limited on 31st March 2021. Who issued requisite number of shares of 10 each to take over the business of DA Limited and what? TA Limited. If you look at two companies joining together and forming what? New company. Deva Asura Namarin. But read the question in full. They have given PPE, financial assets, current assets. Okay. equity capital is given, other equity borrowings, current liabilities are given to us. Fair value of the following is given to us. PPE of DA Limited is given, and which one? TA Limited is given to us. Current assets are given to us. What is the next one? Fair value of the business. Fair value of the business now. Value of the business conducted by DA Limited, and which one? TA Limited is given. Look at the next point. Other important. Feasible cost. However, என்ன கொடுத்திருக்காங்க? Control of the data limited is taken by the management of what? TA Limited. Super simple. Look at the value of the business. 15,000. What is the value of DA Limited? 7,500. இது பார்த்தா 1/3 இருக்கிற மாதிரி இருக்கு. இது பார்த்தா என்ன? 2/3 இருக்கு. Otherwise, in the total merged business, TA Limited will have a control of what? 2/3. TA will have a control of how much? 2/3. It is not Data Limited is not controlling. It is which company is controlling? TA Limited is controlling the merged company. TA Limited is controlling which company? Merged company. Read. Various values are given. Fair value of assets are given. Look at the fair value of the business also. 15,000 for TA Limited, 7,500 for what? DA Limited. So in the merged entity, 2/3 control will be with whom? TA Limited. It's like seller having a control over on the merged entity. It's called as which one? Reverse acquisition. Reverse acquisition. Shall we start? Start பண்ணுங்க. Value of business of DA Limited எவ்வளவு இருக்குங்க? What is the value of business of DA Limited? 7,500 constitute 1/3 of the value. Value of business of TA Limited is how much? 15,000, which constitutes 2/3 of the value. 2/3 of the value. Total business value, otherwise fair value எவ்வளவு இருக்குங்க? Now, TA Limited has what? 2/3 control over the merged entity. Therefore, it becomes what? Acquirer. Therefore, it becomes which one? Acquirer. So, 15,000 divided by how many shares are there with the first company? TA Limited. 15,000 divided by எவ்வளவு shares are there? Otherwise, if 15,000 is எவ்வளவு shares? 1,000 shares na இதுக்கு எவ்வளவு shares தந்திருப்பாங்க? 500 shares வரை கன்டினியூ பண்ணுவாங்க. டோட்டல் எவ்வளவு இருக்கும்? 1,500 இருக்கும். இந்த மாதிரி ஷார்ட்கட்லாம் போல இல்லை லாஜிக்கெலாம் போகும். That is a DA shareholder will hold fellow shares, 500 shares, and TA's shareholders will hold how many shares? 1000 shares. Total number of shares. Okay. Take it up, no need to wait. So we can directly prepare the balance sheet and verify the goodwill or gain on bargain purchase. What will be the share capital? 1500 into what? 1500 into 10. 1500 into 10 and over. 15,000. Reserves and surplus, you can call it as other equity. Reserves and surplus, you can call it as which one? Other equity. What will be the reserves and surplus? We'll come to that. இது வந்து ஒரு working note அப்புறமா reconcile பண்ணிக்கலாம். Next. எவ்வளவு கொடுத்திருக்காங்க? Borrowings. TA எவ்வளவு இருக்கு? TA's acquired எவ்வளவு இருக்கு? எவ்வளவு? Plus DA. Total 5,000. Then current liabilities. TA 1000, DA 2000. Total எவ்வளவு இருக்கு? 3,000. Asset side line. PPE. TA, please take book value. Acquire book value தான் கண்டினியூ ஆகும். PA ஓட book value. What is the book value? How much? 8,000. TA எவ்வளவு இருக்கு? 8,000 இருக்குங்களா? Plus the other DA க்கு வந்து fair value. So total இருக்கும் 16,000. Then what is the next one? Financial assets. Financial assets. இப்போ same book value நினைக்கிறேன். 900 plus 500 plus 800 என்ன இருக்கும்? 1,300 will continue. Then current assets. TA fair value எடுத்துக்கோங்க. What is the fair value? Sorry, book value 5,000 plus the DA fair value. What is the fair value of the selling company? 6,500. Correct தானே?
TA 6,000. DA is not there.
Total. So if you are clever in the exam, total of the balance sheet எவ்வளவு வருது? 28,800. 23,000 வருது. பேலன்சிங் போர் என்ன எடுத்துக்கலாம்? ரிசோர்ஸ் அண்ட் சர்ப்ளஸ் எடுத்துக்கலாம், பட் அதை வெரிஃபை பண்ணுவோம். 5,800. We can do the verification. Okay. What is the fair value of PPE of DA? 8,000. Financial assets. DA owned. Lami DA owned.
800.
800. Then which one? Current assets.
5,000.
5,000 fair value then less current liability of DA. What is the current liability of DA?
2,000.
2,000 less borrowing of DA. What is the borrowing of DA?
2,000.
2,000. So net assets. What is the fair value of net assets? 9,800 is the fair value of net assets. But what is the consideration paid? Consideration is the fair value of the business. 7,500 தான் pay பண்ணிருக்கோம். So it becomes gain on bargain purchase. What is the gain on bargain purchase? 2,300 இருக்கும். Gain on bargain purchase 2,300. Wait. This was on surplus working. Gain on bargain purchase work out பண்ணிருக்கோம். What is the gain on bargain purchase? 2,300. Then other equity of DA acquirer, sorry TA acquirer. எவ்வளவு இருக்குங்க? 1,000 இருக்குது. Securities premium. எவ்வளவு shares allot பண்ணிருக்கோம்? 500 shares into what? 5. The purchase consideration la parunga. We have given 500 shares into 5 rupees. 500 into 5 na varum. 2,500. So total will be securities premium. Do you understand? Number of shares given to DA. Shall we? Shall we? Or another? Next partner. Look at this. Z Limited has two division. Wait. We are in the books of Z Limited. We are owning two departments or two businesses, X and Y. Details are given to us. Okay. Total share capital is 5 crore shares of 10 each. 5 crore shares of 10 each. Q Limited, a new company is to form to take over the business of what? Y. We are going to sell Y. We are going to sell Y. They are going to issue 1 crore shares of 10 each at a premium of which one? 15 per share to the shareholders of Z Limited. Then pause journal entries and prepare the balance sheet of reconstruction in the books of Z Limited and Q Limited based on 1 and 2 above கொடுத்திருக்காங்க. Wait பண்ணுங்க. Look at the first situation. Look at the first situation. To whom the shares will be allotted? To whom the shares will be allotted? Otherwise, who's a new company? Q Limited. Q Limited is formed. They are allotting shares to Z Limited shareholders. Now control is with whom? See, before the demerger, who was controlling? Z Limited controlled by a group of shareholders. Now, after the demerger, we start a new company. That new company shares are held by Z Limited or Z Limited shareholders. Okay, the control is still with which one? Z Limited only. So it is called as groups under common control. Otherwise, control is not shifting. Control is not what? Shifting. So it should be accounted under pooling of interest method. It should be accounted under what? Pooling of interest method. Listen, pay attention, pay attention. X division, Y Limited. Y division. Who's owning now? Z Limited is owning. Control is with shareholders. Now, we are splitting which one? Y division and forming Q Limited. Q Limited is allotting shares to Z Limited or Z Limited shareholders. Now, that Q Limited will be controlled by either Z Limited or Z Limited shareholders. So the control is same. After the demerger, whether control is shifting or control is same. Control is same. So it is called as what? Groups under common control. We'll do which accounting? Pooling of interest method accounting. Start. Control of division Y. Control of division Y. Start. Control of division Y is with which one? Z Limited's shareholders before or after what? Demerger. Control of division Y is with Z Limited shareholders before and what? After the demerger. It is called as what? Transactions under common control. Since the control is not changing or shifting, it must be accounted under which one? Pooling of interest method. Shall we? In the books of Q Limited, what is the consideration? 1 crore shares of, what is the face value? What is the nominal value of shares allotted? 10 per share now. Rupees 10 crore. Recorded at what value? Nominal value or face value only. It is recorded at face value only. What will be the journal entry that will be passing? We have to take over which division? Y division. What is the entry you will be passing? Land, property, equipment account data. What is the value? 600 minus 400. Then current assets account data. Current assets account data. Current assets account data how much? Current assets account data how much?
400.
400. Book value, everything at book value. What is the next one? So what are the non-current assets? Other equity பார்த்துக்கலாம் அப்புறமா. Borrowing how much?
360.
Borrowing so much? 360 இருக்கு. Then current liabilities. Then what is the next one? To consideration. 10. Please remember. Other equity இருக்கு இல்லையா? இங்க negative balance இருக்கா, positive balance இருக்கா? Other equity account data or even reserves should be recorded at book value. எவ்வளவு இருக்கு? Debit balance given, negative balance given. Balance. Wait பண்ணுங்க. Pooling of interest method. We have to take over which one? Other equity also. Reserves also should be taken over. The balancing for will be taken as goodwill or capital reserve. What is the balancing for here? Goodwill or capital reserve? Consideration recorded at face value only. Other equity also should be recorded. Balancing for will be known as which one? Goodwill account data. Balancing figure 10. Then consideration account data. To which one? Equity share capital 10. Balance sheet prepare பண்ணா which company? Q Limited. Equity share capital 10. Other equity will have a negative balance of 150. Then which one? Current liability will be 10. 390. Borrowings 360. PPE எவ்வளவு இருக்கு? 200. Goodwill 10. Current assets how much? 400. Listen. Have you taken up this formula? So in the books of Q Limited, let the consideration be paid to the Z Limited or to the shareholders. The same entry will come because control is going to be same. It's a common control transaction. Please remember the notes which I have given. Number one, recorded at what value? Consideration at what value? Nominal value. Assets and liabilities at what value?
Book value.
There is book value, same book value. Old carrying amount continue pannu. Then what is the next one? What is the next one?
Balance.
Most important, other equity, reserves and surplus also should be what? Recorded or taken over. Shall we? This is in the books of which company? Q Limited, demerged company, demerged company. Shall we? எடுத்தீங்களா அது ஓர வெயிட் பண்ணுங்க. In the books of which company? Z Limited after demerger. Wait பண்ணுங்க. There are two situations. If shares are allotted to us, that is Z Limited. Next, if shares are allotted to Z Limited shareholders, நம்மளோட shareholders கொடுத்துருவாங்க. Wait பண்ணுங்க. I'll do this first, then you will understand it easily. If shares are allotted to Z Limited shareholders, simple. What will be the value of assets? What will be the value of assets? We will continue with which division? X division. We will continue with which division? X division. So, how to record? Share capital of which will continue? Z will continue. Share capital of Z is 50 crore. There is no change in that. It will continue. Then, other equity of division X. Division X, other equity of division X. Other equity of division X, how much is there? 250, that will continue. Borrowings X is not there. Current liability of division X. What is the current liability of division X? 50 will continue. Then asset side, PPE of X 350 minus 300, how much will continue? 50 will continue. Then current assets. Current assets how much? 300. What is the total? 350. That's it. Why? Shares are not received by what? Z Limited. Therefore, not appearing in the balance sheet. Not appearing in the balance sheet. It's shares are given to the shareholders. It's not appearing in the balance sheet. If shares are allotted to Z Limited, இதே தான். Share capital of Z will be 15. Other equity of division X will be 250 இருக்கு, அதுல plus 10, and the shares received will be recorded in other equity. Shares received in consideration will be recorded in which one? Other equity. So this will become how much? 260. Asset side la ரொம்ப simple. Okay, investment is nothing but shares of which company? Y Limited. Shares of which company? Q Limited. Shares allotted to us will be appearing as investment 10. It will become 360. Out. The shares received is included in which one? Other equity, and the share is nothing but shown as which one? Investment. ரொம்ப simple. Shareholder கொடுத்துட்டாங்கன்னா நம்மளோட புக்ஸ்லயே வராது. It will not come in our books. Okay, it will not be an asset of us. It will be the asset of which one? Shareholders. If shares are allotted to us, it will be appearing as what? Asset. It will be appearing as asset. What is the journal entry you will pass for receiving the shares? What is the journal entry you will be receiving for passing the shares? Investment account data are shares in Q Limited account data to other equity account. Investment account data are shares in which company? Q Limited account to other equity account. How much? 10. That 1 crore into 10, 10 crores. Take up this. Why it is recorded as other equity? Because it is part of equity shareholders funds. Our equity shareholders net worth is invested in what? Division Y. Other than transfer பண்ணிருக்கோம். For that only we are getting what? Consideration. This is nothing but shares in which company? Q Limited. So if shares are received by the company, record as investment, include in other equity. If shares are allotted to our company shareholders, we are not getting the shares. It will not be recorded in what? Balance sheet. It will not be recorded in which one? Balance sheet. See, in the books of Q Limited, let the shares be given to company or the shareholders, entry will be what? Same. Okay. If the Z Limited is getting the shares, it will be included in what? Other equity. If our shareholders are getting the shares, it will not be recorded in our books because they are directly going to our shareholders. Clear? Investment received by us is an asset that will be included in net worth. If that is directly going to them, we will not record them in the books. So tomorrow also we will continue with the same Ind AS 103 for a better grip.